This content is brought to you by Uphold, which makes crypto investing easy. I've been a user of Uphold since 2017. They're one of my go-to exchanges. You can buy, sell, and trade cryptocurrencies on Uphold. You can also trade precious metals and equities. They have 10 plus million users, 250 plus cryptocurrencies, and they're available in 150 countries. As with all exchanges, you can buy and sell on them, but I highly recommend you custody your own crypto, not your keys, not your coins. If you'd like to learn more about Uphold, please visit the link in the description. Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Caleb Franzen, who is the founder of Cubic Analytics. Caleb, it's great to have you on. As I was saying before the recording, I'm a big fan. I follow your work. Thank you for joining me today.
Thank you for the opportunity to come on. It's going to be a pleasure to introduce myself to your audience, and I expect we're going to have an epic chat, so I'm really looking forward to it.
Excellent. Let's start with your background. Tell us about yourself.
Yeah, sure. So I'm originally from Santa Barbara, California. I started to have quite the obsession with stocks and the economy when I was in high school. Did one of those like kind of classic econ competitions of like an investing challenge in your macro class, and had a lot of fun with that. Then one of my childhood friends, his father was in the wealth management industry, and so we did kind of like a little summer project with him. And yeah, I mean, during college, I worked internships in both banking and wealth management. I did some time at Merrill Lynch and with two advisors who were in their ultra high net worth. And then after graduating college, I moved up to San Francisco and started working at a subsidiary of BNP Paribas called Bank of the West, which was recently sold to Bank of Montreal not too long ago. And I worked there for about 2 years as a commercial portfolio analyst for them. So I got to kind of have this 30,000 foot perspective of how the bank was making both business decisions and lending decisions, the reporting and regulatory requirements, how we were trying to manage risk, so on and so forth. So right out of college, that was a really, really interesting and like eye-opening experience for me for sure. But I couldn't stay in that industry for too long. I was just, I don't think I was cut out for it over the long run. So after 2 years, I decided to jump off and start doing my own research business, sharing analysis on Twitter and on Substack via my newsletter. And so I've just been hitting the ground running with that since I think it was October of 2020. So yeah, that's the quick little elevator pitch.
So you're a former banker and you're now, maybe in Bitcoin and crypto. Would that surmise it?
Yeah, absolutely.
Very cool, man. But like I said, you do great work, and I'm subscribed to your newsletter. So everyone, I'll have a link in the description to check out Caleb's newsletter. It's really great stuff. And, what was your first encounter with Bitcoin and what was your aha moment?
So my aha moment came far, far after my introduction into Bitcoin. And so funny enough, my freshman year of college, one of my first friends in college, his roommate dropped out of school in order to start mining Bitcoin full time. Wow. And this would have been at the end of 2013 or early 2014. I don't remember exactly the timing, but that was my freshman year. And so, at the time, my intro into Bitcoin was really this kind of just like far-fetched, illusory kind of thing. Really kind of used like at the time, like Silk Road was like the use case kind of thing, right? So real kind of like black market internet type purchases. And so I totally dismissed it, even though at the time I was studying economics in college, right? And so especially for someone with an interest in monetary policy and monetary econ, that should have been something that was right up my alley. So I was super, super ignorant, as most people are when they first hear about Bitcoin. Sure. And then kind of thereafter, I really got the gold bug type perspective, listening to guys like Peter Schiff, who are super important in my development in understanding economics. But I definitely moved on from that train of thinking over time. Nonetheless, if we fast forward to 2016 at UCSB, I was taking a monetary economics course, and our professor was actually a consultant for various central banks. So he used to work for the Fed, the ECB, the Bank of England, and even the Bank of Canada.
Wow.
He used to do like certain projects for them. And so interestingly enough, we had about 2 weeks in that course dedicated to crypto and digital payments. And a lot of that 2 weeks was specifically focused on Bitcoin. And so I learned a tremendous amount about Bitcoin during that class. And that was also going into that bull market, that really kind of ignited in 2016 and led into 2017. And so, I definitely had a little bit of an aha moment at that time because of that class and learning about some of the design features of Bitcoin as a monetary network and the different supply dynamics and things like that with the halving cycles. But even still, I was very dismissive of it at the time. I think because I was still kind of in my gold bug days. And I just saw, I think, a lot of people around me making, in college, making like funny money. They were using like a bunch of leverage. And I was like, this to me just seems like a classic bubble kind of dynamic. And so again, I was very dismissive of it, even back during that cycle. And so it wasn't until that bear market, really in like 2019, I would say, is when I really kind of had my aha moment, really understanding kind of the digital scarcity aspect of Bitcoin and really trying to, I think another massive component for me was really understanding that compute power is a commodity and in and of itself is kind of this tangible asset, right? And so for me, that was a big kind of turning point, is looking at the hash rate of Bitcoin, the monetary network.
Sure. Yeah, that's amazing, man, your journey. And, I'm going to have to clip a segment of this and tweet it at Peter Schiff just to troll him, because he's always trolling Bitcoiners. He's always like, it's so funny. He's like become like a Jim Cramer, kind of like a sentiment marker, right? Oh, okay. If he's saying this, it's time to be bullish, or
100%.
Okay, so let's talk about Bitcoin. Let's start with Bitcoin, and we can talk about some altcoins. I'd love for you to share your screen and show us what you're seeing in the short term as well as the long term.
Yeah, sure. Let's definitely do that. I'll pull this up right here. Should be on your radar now. We'll go through some of the things that I've kind of at least tried to spearhead in my analysis in terms of trying to make some of this stuff a little bit more public and just get it on more people's radar, essentially. And so we're looking at Bitcoin long term here. By the way, can you see our faces here or no? Is that?
Oh yeah, on the side. Mm-hmm.
Okay, let me just go ahead and move this then so that we can see the current price action then. And so what we're looking at here is long-term chart of Bitcoin monthly candles. And in the lower bound, I have something called the Williams %R oscillator. We don't need to get into the weeds in terms of how this number or this indicator is exactly calculated, but it essentially tracks where price is relative to a specific range of time. And so in this particular case, we're looking at the 12-month Williams %R oscillator, so 1 year of price data. And the interesting thing that I noticed here, and I was sharing this back in May and June of last year, is that when we cross into this lower bound segment, these are great kind of accumulation zones for long-term Bitcoin holders, right? So we could see this, 2014 case, this was a great accumulation period. It certainly wasn't the bottom when we crossed beneath it, but every time we've left these accumulation zones, we're basically, the bear market is over and we're essentially coming into a new bull market, right? And so we had this crossover occur again in January of 2023. I outlined that in real time, and, price back then was, 22.2 thousand, right? So, we're certainly higher than that today, but essentially, we're continuing to see evidence that, the worst of the bear market is behind us from a statistical perspective, right? And so it's always important to note when we're looking at these types of indicators, like statistics, on-chain data, these types of indicators, they don't operate in a vacuum absent of macroeconomic data, banking crises, monetary policy, right? Like any major kind of fundamental catalyst could throw all of this out the window.
Sure.
But when we simply just evaluate the statistics, right, we can generally, from this data point, come to the conclusion that Bitcoin is now entering kind of this new bull market. And so one thing that I started sharing recently is if we change this from 12 months to 24 months, so from 1 year to 2 years, we could see a very kind of similar dynamic taking place. This is going to move a little bit slower, which obviously makes sense because we're looking at 2 years of price data. So some of these get pushed back a little bit further in terms of when we leave this accumulation or oversold zone. But we just had that crossover occur for the month of March. So we got the 12-month crossover in January, and we just got the 24-month crossover for March, right? So again, this is another really powerful signal. We're already seeing maybe a little bit of a dip here. We're only 6 days into the month of April, so this could change quite a bit, right? And we might even re-enter this oversold zone again. So the way I've been kind of communicating this is so long as we stay above this lower bound down here, it's very likely going to be the case that we're in a new bull market from a statistical perspective, right? Like I said, any kind of macroeconomic event could throw all of this out the window. But what do these statistics do, right? We're essentially evaluating investor psychology over time, regardless of the catalysts that are causing investor behavior to change, right? So this allows us to kind of suppress the individual catalysts or fears or whatever the hell is going on in the markets and just focus on how are buyers and sellers reacting to the market environment and how is that behavior changing over time, right? So this is still very, very significant for people to have on their radar.
This is a very interesting indicator. I've not heard about it before. Can you remind us of the name?
Yeah, sure. It's called the Williams percent R oscillator. So essentially what it does is it tracks the high and the low over any given period of time. So right now we're looking at the 24 months. So it's going to look at the high and the low over the last 24 months and plot where the current price is relative to that as a percentage.
Interesting.
So, looking at something like Bitcoin, which over the long run has trended much, much higher, looking at this as an oversold zone, right? If you still believe in the fundamental thesis, you want to be buying a significant amount of Bitcoin during these oversold zones if your conviction in the underlying asset has not changed. Because if you believe that the long-term trend is still up, but something is oversold, we're going to come back into that long-term trend.
Yeah, that absolutely makes sense. And I was buying the dip even below 20K. Buying at the 16, 17, 18. So my portfolio looks good as far as this short-term swing trades. I have my long-term hold bags. So question for you, it looks like it is mimicking what we saw in 2019 or 2018, we had the bear market bottom. So let's say 2022 is reflective of that. And then the move up in 2023 is reflective of 2019. What do you think about that thesis?
Yeah, for sure. I mean, we can clearly see bear market behavior in these oversold zones, right? Each time, this is that classic bear market. The one thing that's worthwhile to point out is we got the most oversold in Bitcoin's history during this last one, right? So we could, see where this is tracking back. We never got this oversold on a 24-month basis. I'm actually curious now that we're bringing this up. If we look at it on a 12-month basis, it looks like we had kind of gotten around those levels. Especially back in the 2018 bear market. But again, right, from this particular indicator, this was essentially the most oversold Bitcoin had ever been.
Wow. That's probably a lot to do with FTX, right? And the massive collapse and fear that was around then.
Yeah, absolutely. And each of these bear markets have different catalysts and different kind of contagion events that occur, right? I mean, you can look at like Bitfinex or Mt. Gox or whatever the case is, right? So whatever the catalyst is, something leads to that kind of capitulation event. And even if we're looking at on-chain data, people have looked at, specific types of capitulation signals, if you will, right? And so from a lot of perspectives, that price action that we saw in November is, especially the more time that goes on, is really starting to look like that was, the capitulation event.
So there are some so much of what we were just talking about saying, we're going to move to a 2019 type rally. It's not to new all-time highs. It maybe goes to 40, 50K, Bitcoin's retracement. And then the real bull market, so to speak, starts next year after the Bitcoin halving. Which camp are you in personally?
I've been very hesitant to get too optimistic. Earlier this year in mid-January, I shared a couple of charts calling out two specific price targets, which were the 200-week moving averages and the anchored volume weighted average price. And that gave us a kind of a target range of $25,000 to $28,000. We've come into that range now, right? I'm looking at your sign there in the background, 27.8K. And so, we've kind of hit my upside target in the short term for where I thought price could go. I've done some different kind of price structure analysis that indicates we could move a little bit higher, maybe as high as 32 to 33,000. But I think from kind of an indicator perspective, I love the on-chain data. I love those indicators that we were just looking at with like something like the Williams percent R oscillator. But I still feel like this move has happened very quickly. There is a lot of disbelief in the market, which could fuel more moves higher. But I still am very fearful from a kind of macroeconomic perspective that we're not just going to have this up-only environment this year. If anything, I think volatility is likely going to return. If we look at traditional metrics of volatility like the VIX, it's still below 20 so far in 2023. And so we haven't, even in 2022, we didn't really have a material spike in volatility. And so, look, maybe it's possible the Fed threads the needle on this whole inflation soft landing type scenario.
Sure.
But I'll ask the question, which one of my favorite economists and asset managers has asked plenty of times, Hugh Hendry, when was the last time the Fed got something right? And so, we've just undergone the fastest tightening cycle in US history, in modern financial history. And we know what the Fed's playbook is. They overstimulate and they create asset bubbles and credit bubbles, and then they over tighten until something breaks, and then they repeat the process. And so we haven't yet seen anything break. And the things that have broken have mostly been in the crypto universe, with the various contagion events that we had last year, and now in 2023 with the banking type situation. And the Fed has been able to intervene and kind of save the day on that so far. But what happens when they're not able to just stick a band-aid on something and we actually do like break an arm or something like this, right? So that's my big fear for this year. So I'm still remaining defensive, both in terms of equities and crypto for this year in terms of my outlook. That doesn't mean I'm not still DCAing though.
Sure. Yeah. It's very tricky. And to your point, you were saying earlier, there's a lot of macroeconomic factors, man. It's even with crypto, specifically with the debanking or Operation Choke Point 2.0, as it's being called. There's a lot of enforcement actions. So I don't know if that takes out some momentum from the market where people are very fearful. And because it's not anything like we've experienced before in crypto, where they're actually trying to like stop exchanges, and the SEC and some exchanges are leaving the United States. So it's a tough environment. I'm going to put you in a hot seat here, man.
Let's do it.
Well, and I'm not going to hold you to this because no one is Nostradamus, but what's your price prediction for, the high for the next bull market 2025?
Certainly 6 digits. I think a lot of the analysis that I did on kind of like upside price targets were based on dynamics that were happening in 2021. And so I was doing analysis that was pointing to, like upwards of like 150,000 into as high as 300K. Obviously, none of those came to fruition, right? So take what I say with a grain of salt, but I think structurally some of those targets are still there. One thing that maybe I could share my screen on this as well. Let me pull this up. If we go back to my chart here, we're doing this off the cuff, guys. So if we let's go ahead and get rid of this indicator too. We don't need this anymore. You're out of here. If we throw on if we throw on a Fibonacci retracement, right? And we do this from the highs of November 2021 to the lows of the cycle, this gives us a 161.8% extension of 172,000. And so if we kind of look at former bear markets, right? And this kind of 161.8% extension, we could see that this worked perfectly going into the 2021 highs, both in Q1 and basically into November. Obviously, we got above it a little bit, but this gave us a target of 60,000. Sure. If we go back to the prior bear market before that, and we do the same thing from the highs to the lows, this didn't quite get there. We only got to 4,400, but still we smashed through it, right? And let me actually check something on here. Are we using, yeah, perfect. We're using the fib scale. But, so I think generally that could give us a solid kind of prediction, if you will. So that gives us, I think it was 172K.
So I have this theory. It's could be completely false or just weird, but we didn't have a true blow off top in the last bull
Right.
market. We had this double peak. Now, one could argue, maybe this is in my mind, that if we didn't have, I don't know, some sort of that double peak, if you combine the two price points at their tops,
Oh, interesting.
in reality, we did almost, in a way, would make it to 100K and over. Obviously, it didn't happen that way. But what do you think about that? Because
Well, that's interesting because, yeah, if you kind of measure that decline that we had from 60,000 back down to 30,
Right.
essentially, and then going back from 30 to, let's just call it 70K. So that's an additional 40,000, right? I never thought about it that way. Maybe there's an argument to be made there, right? If you're measuring the magnitude of those extensions, right? So, yeah.
Yeah, it was just weird, very different from the past cycles where you had that straight, straight to the tippity top, Mount Everest looking chart. But this time it was weird. It was like Twin Peaks or something. Let's talk about some altcoins. Are you personally trading or holding any altcoins like Ethereum, XRP, or anything like that?
Not at the moment. I was trading them to the upside earlier this year, going into March, but I haven't taken any trades since. I've really kind of de-risked my portfolio, and I think that was, for the better, right? So right now, the only crypto position that I have is in Bitcoin. I'm still looking at Ethereum for sure. I think the investment thesis in these two assets is completely different, but that doesn't mean that the investment thesis in Ethereum is incorrect. I'm certainly I lean towards being somewhat of a Bitcoin maxi in a lot of ways, but I'm also, I love to trade markets. I love to do my technical analysis. And so, for right or for wrong, these altcoins move by a significant amount. And so, traders love big movements. And so for me, I've not shied away from taking altcoin positions when I, essentially try to see a strategic opportunity in the market.
Sure. I know a lot of Bitcoin maximalists I'm friends with, like they would actually trade altcoins to get more Bitcoin. That's their strategy.
Yeah, essentially, right?
Yeah, it's so funny. But here's the thing: what we've seen over the years, and some studies have shown this, that the way the market has, for the most part, moved, the liquidity goes into Bitcoin. Makes a massive move. It gets into the overbought area. It cools off, it consolidates, but then the liquidity flows to the alts, and then they start popping off. We've seen this multiple times. What are your thoughts on that? And given that Bitcoin right now is consolidating, we're seeing some alts pop off here and there. What are your thoughts on that?
For sure. So you totally diagnosed that perfectly. The one thing I'd like to do here, I had a Bitcoin dominance chart I wanted to share. Because I think this feeds into your question perfectly. And so you're totally right. The order typically goes from Bitcoin to Ethereum to the rest of the altcoin universe, right? So you could detach that out to DeFi, other layer ones, maybe even NFTs, right? All the way down kind of the risk curve, essentially. What we're looking at here is Bitcoin dominance. And so this is, basically the all-time chart. We're certainly not going to get back to these levels, but one thing that is very interesting is back in the, bear markets, deep bear markets, typically see Bitcoin dominance return back to kind of, let's just call it 70%. I almost don't even think we're going to get there this cycle because of how much more demand there is within the altcoin universe. As contrasted to the 2018 and even the 2019 kind of decline again, and even you get the point. So if we just zoom in on kind of this more recent price action that we've witnessed basically since 2020, we could even get rid of this line here, and let's go ahead and get rid of this. What I'm noticing is this very clear consolidation range on a shorter term basis, right? So this goes all the way back to, let's call it mid 2021. So almost 2 years of price data here where Bitcoin dominance is getting into the high 40s. And then it declines each time we've come into this range, right? We've seen massive declines back to this, basically the 40 level, right? We're getting to the 39, 40. And so where's Bitcoin dominance right now? It's right there at that 47 to 48 range. And typically, this is exactly like you said, right? This is when, I mean, look, this bottom was in June of 2022. That was the bottom of the market in a lot of ways, right? We know what altcoins did after June, right? After that kind of capitulation event, even absent of what happened with FTX, right? You know, this chart right here basically says that in many ways, you know, capitulation in the recent market cycle essentially happened there in June, because you look at things like Matic, you look at things like Avalanche, Cosmos, even like Uniswap, right? All of these things are up significantly higher, you know, magnitudes 3x, 5x or more from where they were in June of last year, right? So I would not be surprised if we see this kind of trajectory back down. I don't know if we'll get all the way as low as here. The thing is, like, I love my TA, right? So if it's also possible we get a massive breakout here from Bitcoin dominance just surging. I don't know if that's necessarily going to happen. All I know is that this is a very key level. I wouldn't be surprised if we get rejected here, because it's happened once, twice, 3 times, 4 times. But we've also seen Bitcoin dominance get much higher than 49. So a breakout here, basically meaning more capital is flowing into Bitcoin than the rest of the crypto universe, is also very possible as well.
And, you know, as you're saying that, you know, the potential scenario of breaking out upwards, I was thinking of Balaji and his $1 million Bitcoin prediction, because if you flip the macro factors, you know, things getting worse, it could create an environment where there's more adoption of Bitcoin. I personally don't think it's going to go to $1 million in 90 days. You know, what do you think about that?
No, it's certainly not going to $1 million in 90 days. And if we did, we probably wouldn't be having this conversation right now. We'd be like fighting out on the streets or something. So
right, it'll be like epic civilization collapse or something. I don't know.
It'd be like Hunger Games 2.0.
For sure, for sure. So, you know, as far as you know, this year, and you mentioned like short term, you're looking maybe Bitcoin tops out at like 30K or whatever it may be. You know, what's your strategy? I think you may have alluded to it. Is it just dollar cost averaging? Are you swing trading or anything like that?
Yeah, so I actually just updated my Bitcoin investing strategy based on that Williams percent R oscillator crossover that we got for the 24-month. I literally, in my newsletter this last weekend that came out on Saturday, it was literally called my new Bitcoin strategy. And so if I could just share my chart on this super quick, I kind of highlighted some of the major statistical achievements that we're seeing in the market right now. So I know we obviously didn't have a chance to go over these other key data points. We went over the 12 and the 24-month, but Bitcoin is trading above the 200-day and the 200-week moving average. We're above the anchored volume weighted average price from 2021 highs. Bitcoin's above the short-term holder realized price and the long-term holder realized price, and the short-term holder realized price is above the long-term holder realized price. Cumulatively, all of these signals tell us statistically that we're going into a new bull market. Right? So for me now, I think that investors could have a little bit more haste with their DCA schedule, right? So what I outlined in this thread right here is essentially how I'm approaching my new kind of DCA methodology in this new environment, which is essentially every time Bitcoin falls 10%, I'm going to allocate 10% of my capital into Bitcoin. Okay. And so essentially what this allows me to do is to buy Bitcoin 10 times. And in some crazy event where Bitcoin falls 10% consecutively, that means that Bitcoin would fall to 9.8 thousand based on my math. And if I'm buying Bitcoin at 9.8 thousand, I'm stoked, right? For my long-term portfolio, I'm absolutely stoked. But we also know that Bitcoin doesn't move, nothing moves linearly, right? So what I try to describe here is that if Bitcoin goes from, at the time I wrote this was 28.1 thousand up to 33K, and then it falls 10%, basically going to 30,000, I would DCA that 10% of my capital because we just had a 10% decline, right? Sure. So I'm essentially trying to say that I'm not anchored to the 28.1 thousand price as my initial 10% decline. Wherever that 10% decline occurs, I'll be a buyer, right? So like I said, this allows me essentially, I have my existing Bitcoin stack, but with my remaining capital that I still have on the sidelines, I'm going to allocate 10% every time Bitcoin falls 10%.
Oh, very cool. I love that strategy. So I'm hoping, personally that Bitcoin goes to like 40K, but I'm going to start taking profits as soon as it hits 30K, from my mostly my short-term bags that I start accumulating at 16, 17, 18, 19, and so
Yep.
forth, take profits. But, if it can make it to 40 to 50, that would be great. But, we'll see. Um,
Absolutely.
so I know it's your first time on the show, so I got to hit you with some wrap-up questions so folks can get to know you a bit better. First, if you could create your own metaverse, what would the theme be?
If I could create my own metaverse,
Where would
I'd
Caleb go
prob
to?
I'd probably try to do something like basketball related so I could be like, I could download like Steph Curry's shot and LeBron's athleticism and just do like crazy stuff on the basketball court in the metaverse. That would be pretty fun for me.
See, I like that. I was literally playing pickup basketball yesterday. I'm a huge basketball fan. I was watching the Lakers Clippers game last night. That was, pretty fun.
Okay. I have a question for you. Who do you think wins the chip this year?
Boy, um, it is tough. I don't see anybody in the West, honestly, because they're all so flawed. I think the East, it's either Milwaukee or Boston, I think.
I think it's going to be the Bucks personally.
Yeah.
Yeah.
They're just playing at just an all-time level and or a good level, and the West is just so flawed. There's so many teams with problems.
Yeah, I think the Suns could really compete, but it's too unproven, So I mean, this isn't a basketball podcast, but we should do one of these sometime, man.
Yeah, we should, right? We start a sports podcast.
Yeah,
All right, rapid fire. Favorite food,
sushi,
favorite musician or band,
Drake.
favorite movie,
There will be blood.
favorite book.
Road to Serfdom.
Hmm. And when you're not doing, your chart analysis and so forth, what are you doing for fun as a hobby?
So I've gone fully digital nomadic recently. So I'm out in Croatia. So I've really enjoyed getting to tour around these different cities and experience the culture here. And so I've been very lucky to be able to go out and explore the cities in the morning and then work in the afternoons. The schedule and timing with the time change has actually been perfect because the market opens here at 3:30 in the afternoon and it closes at 10 p.m. And so it gives me full time in the mornings and the early afternoon to go out and explore and enjoy and work in the evenings.
Oh man, I'm jealous. That sounds great. Caleb, pleasure chatting with you, man. Everyone, check out Caleb's newsletter and Twitter profile in the description. Thank you for joining me.
It was a pleasure, man. This was fantastic and a lot of fun. So we'll have to do it again for sure.